And time now for an in-depth look at the market news this afternoon. And for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on today.
Good afternoon.
Well, investors are waiting to see what Fed Chair Jerome Powell says at this week's FOMC meeting. We should find out the results of that early Thursday, Korea time. Of course, the big question is whether there'll be any change to all the liquidity that's been flowing into the market or action to stop rates rising. What will you be looking for in this meeting?
Yes, Jerome Powell will be talking about the overall economic condition and how the Fed will react to the current point in time. Obviously, the Fed's position will not change, and it will continue to support the growth. But if you look at the reopening of economy and the fiscal stimulus adding to the momentum of the recovery, market seems to saying that the inflation risk is still there, and maybe it actually has risen quite significantly, while the Fed chair is saying that the inflation pressure is relatively less and it's not troublesome at the current point in time. So clearly, we need to see whether the FOMC meeting will indicate that there will not be any changes to the monetary policies. And if you look at the current monetary policies, it is a zero interest rate environment, and it has a plan to continue to purchase about 80 billion of treasuries and 40 billion of mortgage-backed securities as the quantitative easing. And obviously that size has not changed, and it continues to happen over the course of the period. We like to see that inflationary worries or the concern will not be an issue as the Fed shows the data and how the things are moving in the right direction. The economy is improving, but inflation is not rising. If that kind of news comes through, then clearly the market can react to positively. However, if there's any indications that the tapering might be needed or Fed indicates that the inflation pressure is actually higher than expected, that would be quite negative implication for the global economy or global financial market and equity market as well.
Well, on Wall Street, stocks did close higher overnight. A lot of those stimulus checks, it seems, in the U.S. are or will be heading straight into the market. The Dow, the S&P closing at new highs again. What's the story in the global markets?
Yes, at the beginning of the market, it really didn't do much, but as it got to near the closing time, the market actually rebounded quite sharply, and Dow gained about 0.5%, S&P added 0.7%, and the one that has been underperforming, the NASDAQ, actually jumped by 1.1%. Clearly, the overall corporate earnings are the key issues right now. And if you look at the corporate earnings numbers, it looks very positive that the S&P is expected to show 27% growth in earnings this year, and the NASDAQ also is expected to show about 26% earnings growth. So these numbers are very positive for the overall market. And the question mark is that how fast the interest rate will rise. A higher interest rate environment means the less value for the equities. But if the overall long-term end of the yield curve remains to be flat at the current point of 1.6% level, and if it remains to be so, and the level of the rising trend is not going to be as significant as the earnings growth rate as the economy recovers, then equity market have a much positive room to further grow. So I think we need to watch out for how much earnings growth and economic growth is expected versus how much interest rate will rise. Right now, we bet on the fact that the earnings growth and economic growth will be better than the interest rate rise, and therefore there will be further room for equity market to grow in the future.
And Korean stocks higher too today, at least in part, it would seem, on the things you just mentioned in the U.S. and also the interest rates coming down from their recent highs. The KOSPI up about 0.7% and the KOSDAQ around 1.5%. Tell us about the local markets.
Right. If you look at KOSPI, it did go up by 0.7%, and the KOSDAQ is up by 1.5%. If you look at the beginning of this year, Korean market will kind of tend to lead the global market. But ever since the mid-January, Korean market tends to follow the U.S. market trend. And if you look at the U.S. NASDAQ, it did show from peak to bottom about 12% correction. KOSPI corrected a little bit less, but nevertheless close to 10% correction from the peak to bottom. Now, however, though, if you are seeing the NASDAQ index rising in the future with economic growth strong, then Korean market will follow. For example, if you look at the NASDAQ yesterday, the sector that led the market rise was the semiconductor segment. And obviously, Korea has a high dependency on semiconductor business as a percentage of export and percentage of GDP and also percentage of the market capitalization of Korean equity market. So if those sector continues to show very strong growth, with the economy tends to improve in the future, then Korean market will rise even further in the future. So we will watch closely how Korean market will do on the basis of the global economic recovery phase that you are going to expect to see in the future.
All right, Mr. Yu, we'll have to leave it there for today. We'll be looking forward to catching up with you later in the week on the outcome of the Fed meeting. Thanks so much for sharing your insights with us, as always.
Thank you very much.